Alrighty, welcome guys. This is the Christmas week update um, for bullwaves.org. This is the Elliott wave update, obviously. Say that again. It's Friday night and the markets are coming to a close, and I decided to get a video out. I hope you all had a great, enjoyable, quiet, peaceful, relaxing Christmas. I did, so job done. Okay, it's been even though it's been Christmas holidays, it's been a heck of an interesting week in the markets. So hey, why don't we just dive in there and get on with it, eh? So I'm going to do maybe a slightly longer video today. I'm going to do the 3 time frames. I'm going to go from daily down to hourly and kind of set us up for, since we're coming into the new year, may as well set us up for what I think should be the main moves over the next 6 months or so anyway, and see how we can kind of work that into our plan, or see how I can work that into my plan anyway for the coming year. Alrighty, so we'll start with the FX markets and then we'll move on. So this is euro dollar and this is the daily chart. And early 18 was the most recent high, 125.47 or thereabouts. And I counted that as a wave B high. I think I might have to get me scribbler on. So I might be doing a lot of scribbling on these charts. But I'm counting that as a wave B high. So ever since that wave B high, we've had a nice move down. Over the last couple of months, it's been pretty stagnant. So it's most definitely a corrective type of scenario. Whatever's happening right now is corrective in nature. So let's kind of zoom down here into this most recent action on the 4-hour chart and see if we can parse that and make a kind of a prediction for the next month or so. But suffice to say that this wave B high should be the final high in euro dollar, and it should portend let's say should be followed by a very large move down in wave C, and I think that's just begun. There's a couple of alternates. We could count this as a wave 1, so we could move up a degree, and that might even be worthwhile over the next month or so, but it won't really, it doesn't make any difference in terms of the larger wave count. But we've got 5 waves down, and now we're either completed on wave 2 and we're moving down into wave 3, or we're working on a larger wave 2. So let's see how that's let's see how that's playing out on the 4-hour chart. So that's the wave 2, and I think we could have a leading or a wedge or a leading diagonal down into wave 1 of 3, and we had a nice corrective pattern into the most recent high there on the 20th, which broke a slight new high. So it counts as 3 waves, A, B, and a C. So I'm working on the theory that wave 2 is now complete, so we could have a wave 1, 2, wave 1, 2, wave 1, and 2 now complete. And if this particular short-term count is correct, then we should start moving down into a wave 3 down. Yeah, there's the only caveat being are we are we going to see a larger wave 2 in blue at 1 degree higher, or are we going to see some sort of a culminating wave C of 2 at a slightly higher high up around maybe 1650s area? And we should know that by the first week in January anyway. Medium to long term, I'm still hard negative on euro dollar. Let's get down to the hourly chart. So we're just trying to work out, or I'm trying to work out this second wave, and it's been the action has been so kind of let's say wishy-washy, very hard, very very corrective in nature. So the idea being that this most recent move down off that 1480 high is a wave 1 down, and then we've got a 3 wave 2. Right, if we early next week, if we start seeing a break below previous lows, we might like back down into the 113 area, 113, definitely a break of that 112.60 low at wave B. If we get a break of that, then we'll probably move right into the third wave down scenario. Excuse me. But if we don't, then we could be working on a larger kind of a C wave in probably a double combination wave 2. So this alternate will probably come into play on that in that scenario. I've got a snoring dog in the kitchen again, so I'm gonna have to get rid of him. 1 second. The dog doesn't like me recording videos, and I don't like him or her snoring, so it's mutually. Okay, so that's euro dollar. We will be moving out of a second wave. We will be completing a second wave soon. We will be moving out of it, I think, to the downside in a large degree third wave. Okay, so let's go to pound dollar daily, and it's more or less the same in pound dollar. We had a very large degree fourth wave, which culminated at the high in April last. And ever since that April high, we've been moving down into a 1-2 pattern off that. So that should be a fifth wave down. And let's get a minimum target for that fifth wave would be the previous low of the wave 3, which comes in at, give me a low on that, about 118.20. So we're almost there actually at that point. So no, that's the minimum target. It's not going to be the final low. I think we will probably push towards parity eventually, maybe towards the end of 2019, start of 2020. But from here to there, we have a lot of pattern to fill out. Let's put it that way. So that's the daily chart. Let's get to the 4-hour chart, and this is the second wave. It's been horrendously convoluted so far, as second waves tend to be. So I think it's working out as a triple combination. So we had 3 waves up in A, we have 3 waves down in wave B, down to the recent low at 124.70, and this B wave was, it was a humdinger. So this B wave seems to have a running flat in the center of it here. So 3 waves down in A, 3 waves in wave B, and then probably another 3 wave pattern down into wave C. We've moved up off that low again. We're kind of sitting at the previous wave 1 low, so we're sitting at at or just above, or if you count that previous interim low there, we're sitting at right at a band of resistance, and the market does not seem to want to push above it right now. And you can see the 200 moving average line there on the 4-hour chart is holding price below it, or price is holding below it for the moment. So we may not be out of the woods in wave B yet, or we may have to work with an alternate, and if we start seeing impulsive moves to the downside, we might call the larger wave 3 as underway. So this wave 2 high could be up here. This is the joys of it, really. I would like to see a larger 3 wave pattern complete, probably at that most recent high there at 132.90, so the 133 area for a wave C to complete. That's the working theory for the beginning of next year. You can see here on the hourly chart, this week has been just, the last 2.5 probably weeks have been just dead in the water. I'm working on 3 waves up in A, some sort of corrective B wave, and possibly another 5 wave pattern up expected in wave C, but we'll see how that works out. you know, looking at it right now, it's hard to see that happening. We may have to, well, we're going to have to see the action to see what occurs first before we can kind of, let's say, move our interpretation. But the market is giving us absolutely nothing to work with over the last few weeks, and we'll just have, it's kind of a wait and see scenario at the moment for pound dollar. So dollar yen, on the other hand, is working out quite well so far, given the fact that we've changed to an alternate account that's been hanging around for a while. So this large triangle off the 2015 high, we have a wave A completed at the 2015 high, a large triangle off that high. You can see wave A, B, C, D into the most recent high back in when was that, October, and 3 waves down again in wave E. And I think we're probably running close to the edge, or to the end of this wave E now. And let's get to the 4-hour chart, and we'll kind of expand this part here of the wave E part. So you can see the wave D high there. So we have wave A, B, C down into wave A, B, C up into wave B, and now we're working on a 5-wave pattern down in wave C. So we've got wave 1, running flat wave 2, nice sharp move down in wave 3, probably working on some sort of a flat pattern in wave 4 here, or maybe a triangle. That's yet to be decided by the market. But I think we'll get one more punch down into the low 109s, maybe 108, maybe the mid 108s. We'll see. We have got that previous B wave there, so that is offering support right now, and we'll see if that breaks. Otherwise, the only other way to kind of, if we don't get a further punch down in a wave 5 to complete that C wave, which will complete the B wave, which will complete the E wave, which will complete the B wave. If we don't get that that final rundown, and we start, say, pushing back up into these previous lows again, I think then we could probably look to the upside. We could probably call wave E and the triangle wave B complete, and we could probably start looking for an impulse pattern to show us, to lead the way higher in Eurodollar. And on the long term, I do think that Eurodollar will dollar yen. I do think that dollar yen will push up to the 140s level, and that's where wave, let's say the large wave C that we're working on here. Let's get a label in there. Professional as ever. So this large wave C, if we end up matching the points run in wave A, or the points traveled in wave A, then we'll probably end up somewhere up around 140, 142, something like that. But that's kind of looking out into far distance at the moment. For now, the focus is on completing this large triangle and working on an impulse wave off the lows in that final low of wave B, and we should see that soon enough. Here's the hourly chart showing the final wave C down in that triangle. So wave 1, maybe running flat wave 2, 1, 2, 3, 4, 5, wave 3, and some sort of flat again in wave 4, or maybe a triangle. It could be, it could work out to be a triangle. We'll see how that plays out over the next few days. A 4th wave either way, and then another break of support, 110 again. Probably I'm calling the low 109s to complete this C wave. Okay, so let's get on to the Dow. So we've had a nice move down off the high in the Dow. I think we're working on 5 waves down. Well, we have completed 5 waves. We've completed an impulse pattern, and we've spilled down into a 3rd wave. We've completed a right-hand shoulder around the head and the left-hand shoulder. We've broken the neckline. Price is well down below the 50 and 200 MA on the daily chart. We've had a nice bounce early this week, but I think I was reading a very interesting take by Carl Denninger over in the market ticker, and he was I'll get into it in a few minutes, but suffice to say that I think this bull market is done, and we are working on a long bear market. We've already begun it, and it's a long way down from here. Okay, so the 4-hour chart, you can see off the highs, you can see that wave 1 down. There's a failed wave C of 2, so it's a running flat wave 2. There's a couple of interpretations on this wave 3 here, so I'm working with the idea that we're still falling in wave 3, but this correction higher here was wave 4 of 3, so we could have wave 1, 2, 3 down to the most recent low. This week's rally as wave 4, and then we should see move down beginning very soon, beginning early next week, most likely on Monday, down into wave 5 of 3. You could look at this as 1 degree higher as well. You could say that this is wave 4 in blue, and we should, either way, we should see a spill down into a 5th wave. So let's get down into this most recent rally this week and see if we can make some sense of that. Just one final point here. If we take the distance traveled in wave 1 and project that off the wave 2 high, that gave us a potential target for wave 3 in blue at 22 dead, more or less 22,000 dead, and we broke through that into the most recent low. So most recent low was 21,450. So with that kind of backdrop, it's kind of a vote in favor of the alternate count here. So that would be the 4th wave at 1 degree higher, and it would probably fit with the amount of points traveled in that 4th wave, and that's in this rally here. But suffice to say, in my mind, that's a corrective rally either way. It's a fool's rally, and you should probably be selling into it. You know, if you still own stocks, you should probably be selling into this rally. And there is another technical reason why this rally may have happened this week. I'll talk about that now in a second on the daily chart, or sorry, the hourly chart. So you can see here the alternate count is shown, and the current wave count is shown also. I'll actually get rid of this these FIP extensions here. They're no use right now. Okay, so this rally has been in 3 waves so far. We're closing the week with a little bit of selling. We've topped. Momentum has died to the upside. I can see on the 4-hour chart as well. we never even pushed up to the previous momentum highs. So it's failing on a momentum from a momentum point of view. On the hourly chart, we've got a lower high as well between wave A and wave C. So higher high in price, lower high in momentum. I think we can probably expect a renewal of the selling again next week. We've got a pretty decent 3-wave pattern completed. We haven't quite touched the upper trend channel here, but the fact that we're again selling on Friday evening is an indication of what might come on Monday morning again. And back to that point by Carl Denninger this week, he was talking about rebalancing the legal requirement for pension funds to rebalance their books, their portfolios by year end, and the pension industry in the States had kind of undergone this very large flight to safety during the last year because of the volatility in stocks. So they had loaded up on bonds and dumped stocks, and quite naturally, that's probably why the market fell so much lately as well. But the fact that they were so overloaded on bonds, they had to rebalance their books. Again, this is all speculation, but The most recent sell-off did kind of offer an opportunity for smart pension managers to pick up stocks again, while people thought they were relatively cheap. So hence the reason, if there was a rebalancing of the portfolios of pension managers over the last week or so, that would kind of pour a lot of money back into the stock market again. But again, I do think it's a fool's rally. I think it's a three-wave dead cat bounce. This bear market is only beginning, and I think this will retrace that pretty quickly over the next week or so. For next week, I'm looking for a fifth wave down, either at 1 degree higher here with the alternate count, or just to complete this third wave. For the moment, I'm going to stick with the third wave down, still underway, and I think we'll break. I think we'll break that 22,000 level again. I think we may even push towards the higher end of the 20,000 level by the time this either third wave or fifth wave is complete. So that's the outlook for stocks over the coming week. Let's move on to gold. So here is the daily chart of gold. We have the beginnings of a very large third wave up underway. Excuse me. The move over the last couple of weeks in general has been quite heartening. Seen as gold has been quite disheartening for me for the last while. But like I've told you for the last while, I'm long gold for the long term, and finally we seem to be seeing some sort of move back up into this trend move again, this third wave up. And I think this third wave up has a long way to go. Okay, so 4-hour chart shows the beginnings still of a third of wave 3 of wave 1. So this would be what's playing out right now would be wave 3 of 1 of 3. So again, this let's say the degree of the wave count here might change. It looks like we've got a wave 1 2 1 2 pattern, and we're working on a third wave up. The technicals of the market are looking quite good. I do like the fact that gold saw some pretty decent buying this week, even with the rally in stocks. So it didn't deter people from running into gold, even though people were buying stocks, or maybe algorithms were buying stocks. I don't know. But the tendency for people to leave the volatility of the stock market and head towards gold is good in my book. It's good it fits with the idea of a bear market in stocks and people running into let's say quality assets again. So I'm working on a third of a third wave up. So I think this has further to go in my book. I think we should break 1300 again fairly soon. Let's get to the hourly chart. We may have wave 3 completed, or you can see an alternate count here. We may be still working on an extended wave 3. It's kind of 6 of one, half a dozen of the other right now, half a dozen of the other. The move over the last couple of days has been fits better, I think, with a B wave rise. So I should actually get some labels in on that. It fits better with a B wave rise rather than a hold on now a second. I'm a man, I can't do two things at the one time. So that's that B wave. So we could be working on a triangle wave 4 or some sort of a flat wave 4. I don't like the idea of this as the beginning of wave 5 up. I think we'll probably push down back towards that rising trend channel line again. back to previous resistance, or now, which is now current support. Suffice to say, I think next year is going to be a very good year for gold. Just everything seems to be moving in its favor at the moment. I showed you the chart on nightly updates numerous times now of the futures market and how horrendously tilted towards the bearish side or the negative side the market was. Like historically tilted towards the to the short side on gold, and that has led to this initial move up into wave 3. I think the general condition of the market that I see developing going forward will support further run into gold, and I think this is a long way to go. For next week, I think we should see some sort of a fourth wave completion, whether that turns out to be a triangle, or whether this turns out to be just an extension within wave 3 itself. If we get a further move up, we may go to that alternate count for wave 3. For now, I'm happy to stay on the long side, well, for the long term, but for now I think we'll correct slightly in a fourth wave, and then we'll move higher again into wave 5. And that, I think, is gold for the moment. Let's move on to crude oil. So this is the daily chart in crude oil, and you can see the initial, or this incredibly sharp move down off the high has, in my book, only begun the larger move in crude oil that I expect. I expect a very large move down into a fifth wave, and I think we might even see a 10 handle or a 15 handle on crude oil before this bear market is complete. It wasn't that long ago, to be honest, like 15, 16 years ago, when crude oil was trading at a $10 a barrel. So, you know, it's not beyond the stretch of the imagination again that we will go back down there, and especially if we are only beginning wave 1 of 5 to the downside. And yeah, that's long term. I think crude is going to be under pressure, and the oil industry in general is going to be under pressure for the foreseeable future. I've counted that initial move off the high as wave 1, and I think we're working on a wave 2 right now at the moment. So let's get to the 4-hour chart, and we'll show you. Yeah, there you go. That's the initial move down in wave 1, and it's got a nice 5-wave pattern to it. We had a little bit of confusion earlier on. Well, I had a little bit of confusion identifying this as the 4th wave triangle. It ended up being a full triangle, but I was expecting this to be the kind of corrective rally in wave 2, but we had a further spill down in prices in 5 waves to complete a larger 5-wave move in wave 1, and now we've got the initial moves up into wave 2 underway. So we can best see that on the hourly chart. So I'm counting the initial rise as wave A, and we're working on a B wave. Again, it's hard to know how this B wave will turn out. It could be triangular in nature. You could probably see a compression there of the wave A high. And the fact that we haven't made a new low today, we've kind of bounced around. Most likely see this actually as a triangle wave B, and over the next week or so we should probably push higher up towards that $50 mark again. And of course, everybody at that stage will call the bear market in both stocks and crude oil as complete, and I even bet that somewhere we'll see people talking about $100 oil again by the time this wave 2 is complete. I reckon we'll probably see people talking. Yeah, we saw it all over the place at the previous high, so yeah, euphoria might even enter into the stock or into the crude oil market again by the time wave 2 is complete, and then we'll again we'll see another catastrophic drop in wave 3. So for now, we want to see 3 waves complete in wave 2. Over the next week or so, we'll probably see wave C or wave B complete and a move up into wave C. Likely hit the $50 mark again. We have the previous fourth wave high at 53, so that's another. I don't think we'll reach that high, but it's another possible target for the market. It's hanging there, and it just wants to be reached again. So, short-term outlook is for a continued 3-wave rally in wave 2. Okay, so let's move on to the S&P. If I can pull up the chart, there's a daily chart. Again, we've got a wave 1-2 pattern off high, and we've moved down into a third wave. It's hard to know whether this wave 3 down is complete at the recent low, and we're working on wave 4, or whether we're still within wave 3. For the moment, I'm working on the idea that we are still within wave 3, and we should see some sort of maybe a stabilization over the beginning of the maybe January might see some sort of whipsawing around here as we finish wave 3 and start wave 4 or complete wave 4, and then we'll see a further move down in wave 5. So far so good. Everything is pointing to the downside for me for the long term. The patterns are all pointing that way. The good old technical head and shoulders pattern is exactly the same. We've still got on the daily chart, we've still got declining momentum, and I don't think that momentum cycle has bottomed out just yet. So let's get down into this third wave and see if we can pull it apart. So here's the 4-hour chart. Wave 1 down, wave 2 up, completed, move down into a third wave, a nice impulsive splash down into a third wave. And again, it's hard to know whether the larger wave 3 here is completed at that recent low, or it's just wave 3 of 3. The fact that it was such an impulsive move, or an acceleration lower, does point to a wave 3 of 3. So that's to keep in mind. Again, the buying seems to have completely stopped this evening. It's Friday evening, and I think the market is it not just closed, or it's coming 10 minutes from the close right now. We're down again Friday evening, so Monday might bring another sell-off into a 5th wave. Off the low here, let's kind of get into the hourly chart, and we'll see what pattern is most likely in the low there. Yeah, so wave 4, I've shown you the alternate count here as well. So wave 4 seems to be a 3-wave pattern, complete, most likely at today's high, and we've got a nice kind of red bar to finish the day off. I think if we get early next week, or Monday, if we get a break of that what I'm calling the B wave interim low there, 23.95. If we get a break below 23.90 again early next week, that'll most likely be the first indication that wave 5 of 3 is underway. For the next week or so, I'm definitely expecting further selling to complete the larger third wave. And like I said, then we'll probably range for a while before we finish wave 4 and then move down into wave 5. So that's the working kind of thesis for the moment. We'll see how that plays out next week. So let's go to silver. I had been kind of tentatively bullish on silver over the last month or so, and it seems to have finally broken our way this week. So the moves off the most recent low were not the most inspiring, to say the least. But the fact that we're again we've broken that $15 mark, which I've been pointing out for quite a while as a kind of a bullish indicator, and we're ending the week again on a green bar. So I think finally we could call wave 2 complete, and we're moving up into a third wave, just like gold. It should be a quite a long-term move to the upside in silver. So let's get down into the 4-hour chart and see what sort of sense we can make of it. I think here, well, I haven't updated this 4-hour chart in a few days, so excuse me while I do a little bit of housekeeping here. So as you can see, I'm working on wave 1, a wave 1 of 1 to the upside at the moment. I like the fact that we've got a nice kind of a parabolic move this week. It suggests that we're probably in wave 3 of 1 right now. So let's get into the hourly chart, and you can see here the leading diagonal at wave 1 has kind of broken our way eventually. We've broken up above that $15 mark again, as I mentioned, and I'm trying to keep my volume low as well because the baby's asleep and I don't want to wake her. Okay, so we've got a leading diagonal wave 1, we've got possibly a running flat wave 2, and now a run higher in wave 1, 2 of 3 of 3. Wave 3 in pink here is projected to 1590 or 1595 by the Fibonacci extension. So it suggests that this vertical move here this week, or well, over the last 10 days or so, is wave 3 of 3 of 1. So we should see maybe early next week we might see some sort of a sideways move in a fourth wave, and then another push higher in to complete wave 5 of 3. The medium term outlook, I think we should see continued upside, kind of broken sporadically with corrective periods in a series of fourth waves. So you'll probably see, wave 3 will complete, and then a larger wave 4, and then wave 4 and 5 of 1 will push the market higher, but we'll see kind of interim kind of corrections or sideways moves in fourth waves. So for January, we're still looking quite bullish in silver. For now, we want to keep above that $15 mark and push towards that initial target. Okay, so let's get on to Treasury. This is a 10-year Treasury, and I'm showing the alternate count here in on the daily chart. You see off that wave, the most recent high back in August 16. So we're looking back a couple of years now. The 134 level, so that was wave 2, and what we're working on right now is a third wave down, a very large degree third wave down. We've got wave 1 down complete off that, wave 2, and either we're completed wave 3 and 4, or we're only working on wave 1 and 2 of 3. So we have a pretty important key resistance level there at 122, and we're quite close to that right now. So if we break that 122.40 level again, well, that would suggest that in fact we're only completing wave 1 and 2 of 3. So both the operating wave count and the alternate wave count suggest long-term serious declines in 10-year bond prices. Okay, so you can see here this fourth wave. It's either wave 4 or wave 2, depending on how you look at it. We've got 3 waves up in A, possible 3-wave move down in B, and now a 5-wave move up in wave C. And this one has been relentless over the last while because people obviously have bid up the bond market has caught a serious bid with the recent decline in the stocks. But I think eventually, once this corrective rise is complete, eventually we'll see both stocks and bonds fall together in a kind of a longer term decline. So This is the key resistance level there at 122.40, and the reason that that is resistance is because it's the previous wave 1 low, so we don't want to see wave 4 break above that wave 1. Excuse me, that wave 1 level. For now, I'm expecting this correction to complete, and we should be able to read a let's say by the end of January, we should be able to read a kind of an impulsive pattern off that high again. So 5 waves down, followed by a 3-wave correction to point us lower for the longer term. So we'll get into the hourly chart. You can see here that that C wave breaks out into a 5-wave pattern. So we've got wave 1 up, wave 2, 5 waves within wave 3, wave 4, and then 5 waves again into wave 5. So we've got an extended 5th wave here, and we broke to a slight new high today, which broke out above that previous wave 3 high. So I think we're topping out. We should see kind of in the hourly chart over the next week or so. We should see a push lower and kind of a head and shoulders around this high. So this short-term high here at around 121.75. Next week, I'd like to see price break down again and push towards the 120 level in a 1-2 pattern to the downside. So that kind of short term in bonds, we might break that 122.40 level. If we do, we'll just switch to that alternate account, which is again a 1-2 pattern within wave 3. And if that's the way it works out, well then again, even longer term will still be pointing lower. So we're kind of, I suppose you could call next week a little bit of a crunch time for the wave count in the treasury market. So that kind of closes out. Yes, it does. I've done the 9 markets from the daily down to the hourly. Hope you have a great weekend. We'll see you all back on the site on Monday evening for the Monday evening wrap. And yeah, like I said, have a good weekend, and I suppose I can wish you Happy New Year, seeing as that's what's next Tuesday is New Year's Eve. Until next week, see you then. Godspeed. Bye bye.